With Russia's invasion of Ukraine adding to inflationary pressures globally, focus has been shifting to securing supply chains for all critical commodities and foods. ASX-listed Harz Potash is establishing what could become Western Europe's most significant potash resource, which is a key element in fertilisers which are used for growing and cultivating plants. I'm joined by Executive Chair of Harz Potash, Ian Farmer. Welcome, Ian.
Thank you very much.
So tell us about your projects and why they're set to be so significant.
Well, Harz Potash controls some 5.3 billion tonnes of inferred resource in the South Harz region of Germany. We announced the results from the first of our projects on the 8th of August, showing a really compelling set of numbers that show moderate capital, low cost, a net present value of some $1.3 billion and an IRR of over 26%. This asset has tier 1 potential. These are assets that are relatively shallow, easy to mine, easy to process and easy to bring to marketplace. So it really is the full package.
So what will it take to realise that value for shareholders?
Well, the next steps for us are to take that scoping study through to the pre-feas and ultimately the definitive feasibility study stage, and ultimately permit the project and then build thereafter. So it's a journey we're embarking upon, which will take about 2.5 years to get to the end of the permitting process.
Now, Ian, just how important is your location? And I understand that your projects are in Germany.
That's correct. Our projects are in the South Harz region of Thuringia in Germany. That's a region that has produced potash for over 100 years. And the Omgeberger mine is an extension, in fact, of those old mining areas that were shut down some 20 years ago. Proximity of our operations to existing infrastructure is also strong as a result. So there are roads, rail, power, etc. already on our doorstep, which of course has significant capital consequences for our project as we move down the line. The other thing, of course, that's important is the fact that we are close to customers. Northern Europe is hungry for potash, and being able to deliver potash to them with low CO2 attached to that transport is a very important factor, particularly if their alternatives are to import over long distances from, say, Russia or Canada. So we have a customer advantage and a capital advantage from being based in the centre of Europe.
So obviously developing a project like this takes money. How do you intend to fund the project?
Well, the 1 million tonne version of the project requires some $620 million of capital. That includes a 95 million contingency. There is a lower road, if you like, where we can expand on a slower ramped up basis of 2 500-tonne slots. That has a lower capital number of $440 million. This funding is only required in 2 to 3 years' time. So obviously we're working through our options as we speak. We are well placed to attract strategic investors now that we have some hard numbers around the first of our projects. And we have no ties in terms of offtake or royalty. So those are both available for leverage if required. A London listing at some stage could make sense for the company because London is a great place to raise funding for assets near the development stage. And 2 examples of that are Highfield and Adriatic Metals. Both have recently raised several $100 million each to fund their projects. So given the compelling numbers of the Omgeberger study, I don't see any challenges ultimately to raising funds over that period of time.
So how quickly can you see Harz being in production?
Once permitting has been completed and the studies are completed, we'll be in production about 2 years after that. So you're looking at all in all a 5-year time frame between now and first potash production.
And how large do you see the global potash market becoming?
Well, last year the market was reported as being 71 million tonnes globally. It's a deep international marketplace for our product. Western Europe's about 6 million tonnes. We'll produce around 1 million tonnes, so it's a fairly small number in a very large market, which is a good place to be for a small producer.
So how do you see the outlook globally for the price of potash?
Well, the long-term price is, of course, underpinned by the fact that population is growing, people's diets are improving, but the arable land on which we can grow crops is finite, therefore yield is very important. So those underpin the entire market. But the conflict in Ukraine has exacerbated what was already a very tight marketplace. As a result of that, you're seeing a shift from globalization as a procurement approach to regionalization as a procurement approach. And that's fundamentally shifting the landscape. I believe that prices have taken a shift upwards that's not going to be reversed in the next decade or so. So therefore, it's a very attractive place, I think, to be and to invest for the longer term.
So why is Harz Potash a good and a compelling story for investors.
I think, first of all, the market for potash is very strong. The price has trebled in the last 12 to 18 months. We evaluated the Umgebirge project at $385 a tonne. Meanwhile, the spot price right now is $900 a tonne. So there's plenty of headroom in value. So the value we're seeing from Umgebirge at 1.3 billion is a very conservative number, I think. And the numbers themselves are compelling, and they should be quite exciting, I think, to shareholders.
Well, thank you so much, Ian, for the update. Ian Farmer, South Harz Potash. We'll look forward to speaking again soon.
Thank you very much.